time to spotlight gambling ahead of the big Super Bowl. The big game is on. Zach Waring, equity analyst at CFRA, is with us. And this is the weekend. I mean, there's so much gambling that's been going on since the pandemic. More and more, I'd say it's really gained in popularity as well as legalization state to state. Where do we stand now, Zach?
Yeah, so going to be a big Super Bowl. We think about 12% growth from last year. Last year was about 1.25 billion Americans bet on the Super Bowl. We think it'll be almost 1.4 this year, maybe a little bit higher. So yeah, I mean, I think you've got some momentum. You continue to get some of these states that legalize, which helps and gives you a tailwind. Because it usually takes a year or two before you get kind of full penetration into a state. So you're still benefiting from those tailwinds. And of course, the top two players in the industry continue to dominate market share. DraftKings and FanDuel, and Flutter is their parent company for FanDuel. But, they have about 75 to 80% of market share in the U.S. in terms of mobile gaming. And we think that's going to continue. And, we really think DraftKings is kind of our top pick in the industry.
See, now, when I was looking, I was looking at 1 year, and pretty much DraftKings is just fractionally, not even 1% higher. It's pretty much flat for 1 year. Flutter is up, which is the parent of FanDuel, right, up 27%. Is that one of the reasons you're picking DraftKings, because it hasn't accelerated as much? I mean, what's the difference between the two? Why is one up almost 30% and the other flat?
Yeah, so Flutter, FanDuel's parent, is a little bit different. They're all over the world, whereas DraftKings is basically just the U.S. And they've benefited. Yeah, so they have positive EBITDA, and they've had positive EBITDA for a while. But we do think there's a room for kind of a catch-up trade here. DraftKings continues to grow around 30%. I think this year they're expecting about 35% growth. And we think they'll grow between 25 to 30 over the next few years. We're really looking for the next big catalyst to be one of the larger states that legalize. So right now you've still got California, Florida, and Texas that are kind of holding out in terms of the states, and they represent a large portion of the U.S. population. And so that's kind of your next big tailwind for these companies. But yeah, I think it's sort of a catch-up trade. DraftKings trades around 3.5 times forward revenues. We think they can trade up towards 4 times. And we think, in terms of innovation, DraftKings is a leader. We think they have the best platform and the best technology.
So it's interesting because as we think of all of these names and the acceleration in betting, that's not changing anywhere. I mean, the fact that you have two great teams in the Super Bowl probably helps with the number of bets, too. So for buy ratings here, tell me about your price targets on what you have. You said DraftKings is your pick. I see one target here. Some of these are higher than where we are now at $41.96. What are some of your price targets on some of these names like DraftKings, Flutters, MGM, Caesars? Which ones are you covering, and which ones do you have higher price targets?
Yeah, so for DraftKings, I have a strong buy. We're waiting to kind of hear from their latest quarter to kind of update the price target on the next 12 months. Currently, I think our price target's around $46, so not much, about 10% upside from here. But we're kind of waiting to hear how, fourth quarter went, and then kind of clarity on the new year for a new price target there. We like, in terms of brick and mortar, we like Wynn. We think Wynn, they cater to a kind of higher end consumer, which we really like. They have some exposure to China, which we really like. And so, they're a little bit better diversified than some of these other companies. MGM is very concentrated in Las Vegas. They do have some, Macau presence, and a little bit of an online presence, but overall, we really like Wynn as a brick and mortar play, and we like DraftKings as kind of the mobile play within the space.
So do you think you're likely to raise that $46 target after you hear about the fourth quarter? Are you more likely to raise it or keep it the same, or cut it?
It just depends on kind of their forward guidance. We really think, we're looking for about 30% revenue growth next year. It'll be interesting to see if they can hit that, because in reality, in the U.S., it has slowed in terms of states legalizing, and you've had those big states that are still holding out that represent a large portion of the U.S. But an interesting fact that I did see it was that New York is expected to put more wagers in this year than Vegas in terms of overall volume. So that was a pretty cool fact. Obviously, New York is the largest state so far in terms of sports betting. So they're expecting that this year they'll finally surpass Nevada in terms of volume over the Super Bowl.
And we were waiting for a New York City casino. I remember that was sort of in play. I don't know where we stand on that. And when you think about people betting at this point, I mean, you need people to have jobs and have money. And what's the sentiment like for the bettors? I mean, are they, I think when I first formulated the question in your last response, I was thinking about people going to Vegas. And are they betting more? Are they spending more at the dinners, the experiences? How are people behaving?
Yeah, so Vegas has actually done better than I expected over the last 12 months. I kind of expected a normalization, maybe a slight slowdown, just because it's been so strong over the past 3 years since kind of coming out of the COVID era. You kind of saw just continued growth, and it's held up better than I thought. So I think for now, the consumer's stable. Vegas will kind of remain stable. We don't see, significant growth coming out of Las Vegas. In terms of regions, we like Macau better. We think with the stimulus over there, they're still not back to kind of that pre-pandemic visitation level. We think there's room for growth this year, more so than Las Vegas.
Yeah, understood. But so it did better then, and just to really understand how folks, because we got a sentiment number in, that was the pits today, right? I know these things fluctuate, but so it did better than you expected. But are people spending? Are they spending more on the gambling? Are they spending more on the rooms? Are they wanting experiences? Any details on that just yet, or you're waiting?
Yeah, so it's going to be hard for these companies in the first quarter in Vegas because last year they benefited from the Super Bowl being in Vegas. So I think, in terms of Q1, you'll probably see a slight downtick or maybe flat revenues, but I think it'll be hard to see any growth in Q1. Moving outside of Q1 and into the full year, yeah, I mean, I think as you get some of these readings, the consumer readings, you can kind of put that into your models. But for now, we think maybe flat revenues in Vegas this year, and potentially, a little bit downside or a little bit upside, just depending on how the consumer ends up holding up for the year.
All right, Zach Warren, great to see you, equity analyst at CFRA. Are you putting some bets in, or I won't ask you about your bets, but do you have a team that you like?
I'm a Commanders fan, so I'm actually really excited that, we've got Jaden Daniels now. So, we have a little bit of hope after, 20 years of suffering.
Okay. You could commiserate with the Jets fans of New York. It's good to see you. Thank you so much.